usually on Mondays, we'll give you an update on that as well, so you guys can download it and review it. Just in general, again, we're going to go over, well, Ryan's going to go over what we're going to go over, but it's going to be, it's an hour-long session. We're going to try to format it where we do a bit of an introduction, which is now we're going to do about 45 minutes of the presentation where we get into nothing too technical, but some technical analysis and some basic fundamental things that you as a trader, every trader should know, because the one thing, and why we started this, is we wanted to promote financial literacy through day trading, but we found that in this space, there's so many people that try to mislead people, and also there's people who just jump in blindly. And one of the worst things you can do when you're using your hard-earned money is jump into trading blindly. So real quick, this is one of the things we want to ask you guys. If you can all your mics, if everybody could mute your mics.
There should be an option for us to do it here. Hold on one second.
Yeah, if you don't appreciate it. And so just during the presentation, if you all could, for latency issues, and we can have everything move as smooth as possible and no lags, if we could all turn off our videos and mute our mics just during the presentation. And towards the end, we're going to have the Q&A session, which we'll obviously announce. And then please turn your videos back on. And we would encourage you to engage and participate. Though please don't be scared to ask questions, because the only way you can learn, only way I can learn is by hearing you guys ask questions, because I'm still relatively new to this too, and I'm still learning, and I'm not going to get into my journey and all that. You guys have heard me say it 100 times. So without further ado, I'm going to kick it over to Mr. Garcia, Mr. James Garcia, and you will see him in the chat. Just in case you guys don't know, this is what the third crucial part, or one of the three parts, excuse me, of Learn to Stock. And this dude right here is kind of, if you see any kind of advertising on social media, or you see any of these posts, or anything, that our marketing director is definitely James Garcia, and also our graphics designer. This super cool graphics you see here, anything you see that's even remotely creative, this is the man behind it. So without further ado, Mr. Garcia.
All right. I appreciate the lovely introduction, Paris. Of course, yes, I'm the graphic designer here, but definitely full throttle with investing as well. I am a seasoned investor and really enjoy and passionate about trading stocks, and of course, because I'm so passionate and love to share the knowledge, I'm the guy that's telling the guy down the street that's dropping the mail off or whatever, hey, you trade stocks, right? Just because I feel like it's something that everybody needs to learn, and it was something that was so difficult in my eyes, a few years back. And then when I really got into it, I feel like anyone can learn to do this. It's kind of basic if it's broken down to you. And in a simple way, right? And that's why we call this Simple Trading Seminar, because that's what we want to present to you guys, something simple that you can understand, digest, and then of course apply. Right, so that's what we're here for today. So I want to thank you guys all for joining. And without further ado, let me introduce the man of the hour, Ryan Diaz himself. Right, he is our expert here with over a decade of proven fundamental and trading experience. Right, he's got a lot of training that he's taken himself. For example, Rich Poor Dad series. He's got the Elite Legacy Education and Mentoring, and he's really anything that he gives, take it. And you can guarantee yourself that it's going to be a proven strategy, right? So he's helped me a lot through my journey, been successfully trading in a profitable system. And we just want to share that, guys, share that with you guys as well. So Ryan, the floor is yours, man.
What's going on, ladies and gentlemen? Glad to be here. And just to let y'all know, I am a new educator, so I'm going to do my best to try to get this information to y'all as simply as possible. And if I get a little nervous or anything, I just want to, they say that's a little trick to say that you're nervous in a group of people. So just in case, but basically we're here tonight to make this simple for you guys. And we're going to go over some core concepts. Let's see here. So basically here's our mission statement. We're looking to promote financial literacy by simplifying trading strategies. And, of course, we can't guarantee you will get rich overnight, but we can guarantee you that you will learn to stock. That's our mission here, that we're trying to spread financial awareness, financial literacy for all walks of life. And we think that everybody should learn this stuff. So that's why we're trying to do our best to educate. Okay, so basically getting started today, the basics of what you're going to need to know to start trading today or tomorrow when the market opens. We're going to talk a little bit about price action. We're going to talk about some pattern recognition and some of the patterns that we actually scan for and put out in what we call the hot list. So it's basically a list of stocks that are based on fundamental and technical analysis, which are two of the four pillars of investing that we go over. And then also lastly, support and resistance. That's basically the areas that we're going to teach you to look at on a chart And it's going to help you identify levels where you're going to want to buy and levels where you're going to want to sell. And this is more geared and catered towards the short-term speculative trading, although these concepts are proven to work in long-term investing as well. So let's go to the next slide. All right, so if you're brand new to trading, it's really all about the mindset. Trading is not as technical as you may think. It's really all, I tell a lot of our students that are in the private Telegram group chat that it's all psychological. It's 80% psychology and the 20% technical of actually pressing the button to buy or pressing the button to sell. So it's you're basically understanding what you would do if you were in someone else's shoes and knowing what they would feel or how they would act before they do it. So we're going to go over some price levels. You're going to be able to visually tell whether or not other buyers in the market, other investors or traders are looking to sell at certain levels or looking to buy at certain levels. You're going to be able to look at a chart and understand what they're going to be thinking because you're going to be thinking the same thing too. Okay, so we got the different types of traders. So we got day traders, swing traders, position traders, and investors. They all kind of have the same goal, right? To make some money. With the day trader, though, they're in and out of the trade within the same day. So they may trade sometime in the morning when the market opens. Here in Houston, in Central Time Zone, it's going to be about 8:30. Market closes at 3 p.m. Central Time. So they're going to open up a position maybe at the market open or maybe sometime within the trading day, but get out in the same day. They're never going to hold a position overnight. As far as swing trading goes, they're basically traders that are like us and how we're going to teach you to be, because we believe that it's the most efficient way to actually make money in the market, aside from the long-term investing perspective of it, is to basically trade pivot to pivot. So you're trading from the lower pivots if you're bullish to the high. So you're going to buy at the low pivot and sell at the high. So that's what we're going to teach you to basically eyeball within the market. Now, position trader, it's kind of like swing trading, but they're actually capturing the entire trend. So if they're in something like Dogecoin or any kind of stock or anything like that, they're not going to trade pivot to pivot. They're going to trade that whole entire cycle, kind of like how you see on this this picture here. They're going to stay within that stock or the altcoin or the coin for the whole entire cycle, not just pivot to pivot like you see represented here. Now, of course, with investors, they catch the whole entire cycle, which is, they're buying, they're accumulating when the stock is down, and they're basically speculating on the long-term life of that stock or that company for the long term until retirement. All right, so basically what we do here at Learn to Stock is teach you how to swing trade and day trade, or we send you day trading alerts. But the core of what one of our services is, which is the hot list, is swing trading. So what is swing trading? Swing trading actually refers to a speculative short-term type of trading. Basically, you're attempting to capture gains in a financial instrument, whether it's a stock, an option contract, a futures contract, or any kind of currency within a specific time frame. So most of the time, it's actually going to be on a day time frame where we're going to analyze the chart. And we can be in that trade anywhere from one day, which is overnight, into a couple of weeks, sometimes even a month. And just to go back over the pivots, here's a picture of showing what a pivot actually looks like with candlesticks, Japanese candlesticks. And this is what we'll actually be focusing on trading. Now, price action. Price action is actually one of the major keys when it comes to swing trading or any trading really, because we're going to look at where the sellers and the buyers are on the chart. You actually, when you're analyzing chart and you're utilizing something called technical analysis, you're looking to see where there's certain levels where investors have sold before and where investors have bought before. And those actually are called support and resistance zones. But basically price action, which is what we trade based off of, is the interaction of the buyers and the sellers basically measured by these candlesticks that you see on the chart. So I know you probably heard the term buy low, sell high, right? So in bullish swing trading, there's certain setups that we look for so that we can actually capture the concept of buying low and selling high. When you look at these candlesticks and these patterns, what they're really trying to tell you to do is it's kind of like being at a traffic light. You're coming up to a traffic light. You see that the light is turning yellow, so it's signaling you to slow down because a red light is coming up. It's kind of the same concept. And when we see a pattern, that tells us to go. It's the green light basically telling us to enter the trade. So we got 3 different versions here. When it comes to the buy low, sell high, we can go with reversals, which is when a stock is actually in a downtrend and then it starts to create a bottom and you know that it's going to start reversing. So we're going to teach you guys about reversal trends and how to enter into a reversal pattern. Now, a pullback is another type of trade that you can do. A pullback strategy is when the stock is already in an uptrend, creating higher highs and higher lows, and you're going to capitalize on the fact that you're going to buy the dip at that support level where we talked about previously. And you can see in this image here, that's where you're actually going to be buying. You're going to be buying at that support level where these little pivots meet, and then capitalizing and taking profit at the resistance, which we'll go over a little bit more. The third version that we actually teach and scan for in our daily hot list is going to be the breakout. So basically you have an area where price action, which we talked about earlier, is consolidating. So we have a nice trend up, as you can see here on the left side of this image. The stock kind of moves sideways. You can see that there's some indecision. Investors don't know if they want to buy more and take the price higher, and sellers don't know if they want to keep selling and drive the price lower. So what happens is it causes price to compress, and then you see a breakout of price, and we want to catch that momentum above this resistance level, which we brought up earlier, and basically trade bar by bar or hold on to it until we're happy with our profit. So those are basically the type of patterns that we scan for and we look to capitalize on. So to go to a little bit more into support and resistance, this is the concept, again, of buy low, sell high, but we want to trade with the trend. In this example here, we actually have an uptrend, which is defined by higher highs and higher lows. Most simply put, anytime you're looking at a chart and the price is going from the bottom left hand of the chart all the way diagonally to the top right-hand corner of the chart, you can pretty much think of it as an uptrend. And we want to trade with the trend. There's a saying out there that the trend is your friend. And when I say trend, I don't mean these meme stocks that are coming out and these altcoins that are coming out on Reddit subgroups and stuff like that. The trend is basically that the stock price action is actually moving upwards towards the top right-hand corner of the screen. So going back over the support and resistance level, we're going to want to buy at support, meaning this lower trend line here, which we'll go over in more detail in other lessons. But basically the bottom, you can see that these little pivots, they connect. It's kind of like connecting the dots. The more or lower pivots that you can connect with the trend line or draw or visually look at, that's going to signal you where you want to buy at. Basically, what you're trading based off of the idea of probability. You can say that, hey, it hit this lower trend line in the past, it's hit it again, so probably it's highly probable that I can buy here and make some profit. It's going to bounce off of that lower line again. And we're doing the same thing on the sell side. When you're looking at the top, you're looking at the pivots and where it's sold. And since this is an uptrend, you're going to draw your trend lines from pivot to pivot. And we're going to look where it's hit this upper trend line, and that's where we're going to base our decision on when to sell. So that's support and resistance. You want to buy at support and you want to sell at resistance. So buy at the lower pivots, sell at the top pivots where the top trend line is. And then how we zero in on the trends is actually with candlestick patterns. So whenever I'm doing the hot list scan and I'm searching for these uptrends and clear defined support and resistance levels on the chart, so that way the price becomes more predictable. The way that you zero in on this is with candlestick patterns. The reason traders use candlesticks is that they can give us clear visual cues for future price movement. But the candlestick without the rest of the chart analysis, including trend, pattern, support, and resistance, it lacks context. So going back to this, if the candlestick pattern is not happening at support, then that means that we don't have a signal to buy. So that is the context that we're looking for. Where are these patterns actually occurring at? If they're occurring at support or at a buy level, that's when we want to buy. Okay, and then also patterns that we trade, and I'm going to give you some live examples from the hot list that we actually scanned for recently. So some of the patterns that we trade that have been actually favorable in the market right now are these triangle patterns. These have been our bread and butter on the hot list inside the group chat. So we got triangles, and then we also have a break and retest, which I didn't get a example here, but I can pull one up and show y'all. But with the symmetrical triangles, basically what's happening is we have an uptrend, which is defined by higher highs and higher lows, but then it starts moving symmetrically to the right side. It starts moving in between these two lines, which can be looked at as support and resistance. Why? Because these lower pivots connect, and that could be support, and these top pivots connect, and that could be looked at as resistance. So when you look at these triangles, what I want you, the best way that it was taught to me is imagine that you're holding a little spring in between your two fingers. So if you're holding that little spring and you start to compress it and you let it go, most likely it's going to go up. It could break down. It could break down in either direction. But since we look at these patterns as continuation patterns, we can only assume that if it's in an uptrend and it creates a symmetrical triangle and price compresses like this, that it's going to continue to go upwards, because we're all basing this on probability, right? It's high probability trading based on what we visually see. Same thing with the ascending triangle. We got support at the bottom. If you look closely, you can see all these lower pivots connecting. We got pivot 1, pivot 2, and this was most likely the first pivot that was cut off in the picture. And then we got resistance forming. So with this pattern, the logic behind it is that you have higher lows, but it's yet to break out of this resistance level, which is where these two pivots up top are connecting. So the price is compressing much like the symmetrical triangle, but it's after an uptrend and it's moving further and further up while not moving down, if that makes any sense to you guys visually. But if you're looking at this, it's still moving in an uptrend, but the lower lows, the low pivots are still moving up. So that basically tells us we've been in an uptrend, it's compressing, it should break out. Always remember that little, like you're compressing a spring in your fingers. If you're holding it down and you let go, it should, bounce up. Okay, so hot list swing trade examples. This was actually from last Friday. One of the guys in our group chat had brought it up. AMC has been a hot stock, talked about in the news and all that jazz for the past couple of months since January. So actually, look, if you can see when I did my scan, it actually came up with a symmetrical triangle. So this is textbook example. This is real life example. This was from April 22nd. And then on the next slide, we have the results. So we went from $9.99. And then on April 27th, which I believe is today, we had a pop up to about $12. So you could have easily made like a little $2 move, depending on how many shares you had. So that's a real life example that we have there. Let me go into some more. So Ori was one of the, I wanted to show you, I want to kind of do a little time machine. Oreos was one of the hot list picks that I had scanned for back. You can see here the date is February 19th. I'm going to pull it up on the chart. Price here that we had it at was 1978. Currently trading at 24, the high of 24.75. So you would have had a nice little run up. We scanned for it, we threw it on the hot list. You can see here that I grabbed it because it was making an ascending triangle pattern. Boom, threw it on the hot list that day, February 19th. Could add a nice little run up. Another example, BAK, possible bullish breakout setup. I like to give you guys a little bit of a description of what I see, what the pattern is, whether or not it's an uptrend. You can see here we have higher highs, higher lows. I tell you how to actually enter into the trade. You got to set a buy stop limit order, which we'll go over in further detail in another lesson, 50% of the ATR. So I give you all that. I also give you possible support and resistance and a price target or where the resistance was. So we'll look at this. This was actually on February 19th. Currently trading at a high of 2108. It was at 1153. So those are some of the hot list results. These are swing trade or position trades. So you could have bought it at the 1153. It would have broke out, and then you would have continued to have this nice, beautiful uptrend. That's what we like to see. Now, we can't guarantee this is going to happen every time, but we base our analysis off technical analysis, off trend lines, and off of patterns. And this is the results that we get. Just to kind of go over one more, we got ATI here. This was from February 26th. As you can see here, I did the scan. We got a symmetrical pattern, or not a symmetrical, but a triangular pattern here. Price is bouncing in between support, which is this blue line, bouncing off of resistance, which is the top pivots. And then we called it out on the 26th, and it is currently trading, what did I say it was? ATI. Currently trading at 24.64. And that was at 1966. So you would have made a nice little profit on that one as well. Another one that I didn't have time to, but if you're in our group chat, you know this one, because this was actually from one of our hot list picks from a few weeks ago. This one was a nice gap up. This one was creating a triangular pattern. And you're gonna get to the point where you can just kind of look at your charts and then be able to not even have to visually draw them, but you'll get your little trend line tool here, and you're gonna know that, oh, this is creating a triangular pattern. I can look at, I've been doing this for so long that I can look at charts without anything on them, and I can see what pattern it's creating. We put it on the hot list somewhere in April this month, and then it gapped up. You would have had a nice run up. We was at 10.17, went up to a high of 13.85. It's pulling back, testing this level as support here, and it's probably going to continue going up.
So I have a question. If it's cool, right?
Sure. Yeah. Go ahead.
So the hot list seems pretty straightforward. Like you give obviously the symbol, you give an explanation of why it's a good pick for the day, or a good swing trade, and you also give a chart kind of proving with technical analysis this is why and this is what we're predicting. What's the difference between the hot list and the alert channel?
So the alert channel, good question, Paris. Let me pull that up. So with the alert channel, these are basically, they should be viewed as day trade alerts. They're not buy signals. I want to emphasize that. They're not buy signals. What it is it's the, hey, whoa, BTX, new high of the day. Let's go take a look at what's going on with BTX. And then also not only that, but we track the price for you throughout the day. And it's, milliseconds. As soon as this hits 42, we're alerting it. Our algorithm, everything is alerting it to you through this private alert channel. So that's the difference here. So these happen intraday. These are the alerts. So basically the exercise is, once you see the alerts, you should pull it up. And since this is actually an intraday trade, we would see what price action is doing. Well, let's say Wednesday. What time did we alert that? That was at 1:32. So I'm pretty sure we alerted this earlier than that, but around 1:32, 3, 2, 1. So it had a nice little pop up here. We could have brought the chart up and just kind of taken a look like what it was doing. And you can base your decision off of that. You can do a little bit of quick technical analysis. Unfortunately, with day trading, we can't hold your hand, and after an alert is sent out, get in the charts with you right away. That's why we do a little bit of the education as well, so that you can look at a chart and see what's actually going on. So you can see there's a little bit of a triangular pattern kind of happening here. So you could have said, hey, I might hop in on this after it breaks above this level, and you could have caught the ride up to the high of the day, which was 54.24. So we teach you what we look for. That way, when it comes to the day trade alerts, you can pull up a chart and know what to do with it.
Sorry for interrupting you, Ryan. We actually alerted BTX at 7 a.m. right at market open, 7:30 actually.
There you go.
Right, my time here.
Good
So
catch,
right at market open, we alerted it, and if you would have jumped in at it then, you would have had a huge come up because it was like 100%.
Where was it at, bro?
Price.
What time?
7:30 my time, might be, I guess, 6:30 your time.
All right. So James is right. I knew we alerted it, but I didn't think about going back and checking it out.
You can actually hit that search at the top and just hit BTX.
6:38. Try 6:30. You guys are 1 hour ahead of me, right? 8:38, I guess. When's market open for you
8:38
guys?
our time? Oh, you're right. Let me just search it. That'd be better. BTX.
Can I ask a question? So the idea for the day trades is to be there from market open?
Correct. That's the style. So if you're going to day trade these alerts, there it is right there, 8:43. So if you're going to day trade these alerts, then yeah. So you want to be attentive. You want to pull them up on the charts and see what you're going to do with them. That's the idea behind the alerts.
All right, I guess that's a good segue to everybody else. If you guys want to, I guess I should turn mine on too.
Yeah.
Just so we can. It's cool, especially in this virtual world, to put a name to everybody's faces. But then too, if you guys have any questions, and I mean any, and I emphasize this because I know me, I'm relatively introverted, so it's and I take a long time to learn things. So I always have a lot of questions, but I always don't necessarily know when. But please feel free to ask any questions, even if you think it's stupid, which is not. We're here for it. Because I know one of the biggest, let me ask you this right now too, Ryan. One of the biggest questions I get a lot is some people say, hey man, I'm just kind of starting out. I'm trying to pick between Webull or Robinhood or Coinbase or TD Ameritrade. Like, what would you suggest I even start with? What platform?
To be honest, I know Robinhood is one of the easiest to understand. I don't really like them as a broker, especially with all the, the hype that has happened recently. With them limiting selling of AMC and GME and stuff like that. I would always say go with the bigger bank. Like I mentioned Fidelity to somebody today, TD Ameritrade. You're not going to wake up one day and wonder, hey, where's my money? You know what I mean? Robinhood's relatively new. That doesn't mean that they can't grow and become a bigger broker and bank and all that. I'm just saying that they don't even have a call center yet. You can't call somebody as of right now, as far as I'm aware, and say, hey, what's going on with this? What's going on with that? It's all email. So those are some things that you want to consider. What is important to you? Do you want to be able to call somebody to place an order if you're not comfortable on your phone yet? Do you want to be able to call somebody for customer support? Yeah. So I would say think about some of the things that you would want as a customer, even going just to a bank, because that's essentially what they are. And then also the tools that they provide. Robinhood is great, makes it easy for you to get in and out of a trade theoretically, but they're not really great as far as analysis goes. So I would go, if you're more of a technical analysis kind of person like myself, I would go with somebody more like Webull, because Webull has the same tools that you kind of saw me use within this platform that I use, this TD Ameritrade platform. So those are some things that you want to think about personally and kind of go from there to base your decision off of.
And actually, too, to touch on Webull, yes, I agree with you 100%. I started with Robinhood just because it felt very user-friendly. Somebody's mentioned Fidelity in the chat. I have never used Fidelity for like day trading, but I think I'm gonna check it out. I have them for a mutual fund, but I think I'm gonna check that out too. It's a good idea, Johnny. And he said it's relatively easy to use, so if you guys want to look into that. But I too started with Robinhood, and I migrated to Webull. But like Ryan was saying, for me, it was primarily because of one of the tools. Webull allows you to, and I'm also weird. I wake up at 3 a.m., but Webull allows you to trade from 3 a.m. Central Time to I believe 6 or 7 p.m. And just that pre-market time was huge for me because I was already up during that time. Robinhood doesn't allow you to trade, and most places won't allow you to trade until market open, I think at 8 a.m. So then, just kind of look in the tools of every platform and see, like he said, what best works for you.
Absolutely, absolutely. And did you want to go over some of the services that we provide? And
James, you want to hit a couple of those, and I'll hit a couple more.
Sorry, I was on mute. Sure. Yeah, so we've already talked about a couple of these, right? Of course, you guys got a little glimpse of the alerts, right? Again, this is mostly for just day trading. And really, this is like, just to answer your question, Anna, once you get these alerts, review them, what I tend to do with these is just pay attention to price, right? Pay attention to the price, not even so much the chart. You'll start to see if there's enough volume behind it, price will just continuously be moving up and down really fast. And that's a good indicator, right? It's a good sign. If it's moving really fast, that means there's a lot of people buying and selling. And if it's moving really fast and incrementing, that means you should buy right now, right? Buy because the potential of it going up is good. But of course, those stocks are ones that you would need to keep an eye on, because they could be like pump and dumps. They get a quick run, and before the day's over with, they're back down. So you gotta keep a close eye on those. But if that's not your style, if that's not something that if you got a day job and you just can't really pay attention to it, swing trading is probably your niche. And that's what we got the daily hot list for, right? That's really my approach. I do pay attention to stocks and on a day time frame, but it's just a little more stressful for me. And being with all the things that I have on my plate, I look for more of a stress-free style, and that's why I pay a lot of attention to the hot list. So we send those out every night between 8 and 10 o'clock. You'll see that I post them. This is all Ryan's analysis, though. I just kind of make them look pretty. So, right, it's all behind Ryan. And of course, we got the live seminars, as you can see. You know, we plan these and try to make it real simple and basic, and just try to deliver some real great content for you guys to learn and get started, and really show you that this is not as hard as, you know, it may seem, and anyone honestly can do this. Right, Paris, I'm going all the way. I'm motivated. Sorry.
You good, man? You
I'm
good,
going.
man?
I'm going. All right. And then, of
Good.
course, the private online community. We got some people in here that are already in the group. You can see the community is amazing. We all, you know, we have a motto in the group, and it's called "Get Rich Together." Right, rich together, because this is a business that, or an investment plan, right? That it's not, you know, who's better. It's not competitive. We can all do the exact same trade and get rich together, and that's the idea here, right? Ultimately, we're looking for us to, you know, give you some resources to make some extra income, and that's what, you know, we do with that. And then, of course, if you're completely new and all of this is just not making any sense, then we can definitely go into more of a, you know, one-on-one type of thing and schedule some calls. Another thing, we are putting together, you know, some real beginner courses, and even working on an ebook for you guys that's going to just create this entry level a lot, you know, make it a lot easier for you, reduce that learning curve for you, and then get you into profit as soon as possible, right? So a lot of great benefits. Of course, there'll be more to come. We're always constantly looking how we can build value for you guys, and just, you know, make this process and transition between, you know, not knowing what to do with the extra money that you have, and, you know, learning how to invest it and then becoming profitable from it, right? So that's what we got. Learn the stock, signed up, got a really good deal right now, only $30 a day, right? You can find that literally in your cup holder, in your couch, right? You can spin that and make some profit off of it. So think about it, guys. Honestly, a lot to learn, and we're here to help you out.
And that also, too, to piggyback off that, you know, we have a couple of things in the works, but just, I guess, you know, we have a little bit of time. Again, please stop me. I'm super verbose. I talk too much all the time. But
Me too. Don't worry.
why we did this, man? Listen, I am not by any means an expert trader. And again, I'm sorry if you guys have heard this before, but long story short, I was a waiter at a restaurant last year. I started with $50, and then I went to Whataburger and got a number 2. Double meat, grilled onions, water size, only the fries, and a root beer. And that cost like $7 something. And then I had $43, and I used that and put it in a Robinhood account because people kept telling me, man, try it. People kept telling me about investing, and I was like, okay, I'm gonna try it. And then, but it's not, you really have to kind of do it yourself with, you know, either paper trading or with real money to really get the feel of it. I know people say that and it sounds weird, like it's iffy, but you kind of got to get out there yourself. But my mistake is getting out there blindly, not knowing any of this stuff right here, none of it. And I went the wrong way, lost a little bit of money. It was only $43, but over time, over building up my account and then learning different things and bumping my head and going the wrong way, I eventually kind of figured it out. And if you guys were in the group back in February, and I hate to keep saying this, but like, you guys would have seen, you know, we used to do like a P&L challenge where we would post our gains, our monthly gains. And that month, well, I don't want to say that, but we all did well that month. And it's not just because I'm some kind of super genius, because I literally implemented.
It's okay to brag, man. It's okay.
Well, the posts are there and it's on the website, but, you know, somebody in our group made $9,000 just in the month of February. And it's literally from the techniques we all learned from Ryan. Like we all linked up together, and this dude had a plethora of knowledge, and it just blew me away. And I was like, man, I wish I had known this. Where were you a year ago? And that's how we said, man, we don't want anybody else to make the mistakes that we made early on, or even people make you think that you have to pay thousands of dollars to learn this stuff, or you need to be a super guru or have an amazing broker. None of that's true. You can do this. This is simple. We can all do it on our own. You know, we really can. And financial literacy literally changed my life. And it's a difference between everybody, the successful people in society and the people that are just kind of average. It really is. And I'm just glad that we're able to promote financial literacy through day trading. And that's what we're here for, really, honestly. So, and also too, this is relatively new. We started in January, and we have 3,500 people in this group now. And so because it's grown so fast, and because we're getting so much support, and several people trying, you know, wanting to invest and learn this stock just so we can grow it, and we can make it better and do more for everybody. We have an app coming soon, like a mobile phone app. So, and by the end of the summer, I don't want to give you an exact date, you'll be able to pull up, you know, the Apple store, the Android store, go into online and pull up a website that has all the things that Telegram encompasses. So we're just kind of growing fast. So we want to do what we can to really spread this and teach everybody. So if anything we can do to help you guys out, man, feel free to reach out to us through email or through the private group chat. And if you're not already subscribed, you can go on the website and subscribe. In fact, you know what? I'm going to go ahead and send the link for the 5-day free trial. It's through PayPal. It's cancel anytime. So you can click this link. You'll get access to our private group chat, all the things you saw on that flyer. And then you can kind of experience it for yourself. And we can almost guarantee once you get in, you're not going to want to get out, but you can cancel any time and there's no obligation. You don't have to pay anything. So let me put that link in here for you guys just for attending. We do appreciate it. And you guys can try it out and see. And if not, hey, stay in the Facebook group. All that's free. The social media, follow us on Twitter, Instagram, all that's free. So just come check us out. And thank you for continuing to learn the stock with us. And thank you for growing with us. And, you know, we're here for you. That's all I got. I'm gonna shut up now.
We're constantly answering Facebook questions as well. We're leaking some of the hot lists. So there's ways that you can benefit just by being with us on Facebook as well. So
Do we have time for one question?
Absolutely.
actually, right now is actually going to be opened up for Q&A. So if there's charts that y'all want to look at, if there's any technical analysis questions that y'all have, anything, we can go over that right now.
Okay, I have a couple, but my first is options. What are options? How are they different from the stocks, like day trading, whatever, or swing trading rather?
Options is basically my forte. So I love trading options. They're highly leveraged, so they give you a lot of power, and they actually basically think of an option as it's a contract, and you're basically either buying the option to purchase a stock, or you're buying the option to put the stock into somebody's hands. So I want you to think of it that way. You're basically buying or selling a contract. We won't get into the selling part. So we're gonna talk about buying, and we're gonna keep it simple. So you can buy. Let's see, this one's not optionable, but I know Ori is. So this is your option chain, and all an option does is give you control over 100 shares of stock. Okay. So you're basically, if you're going to buy a call option, and you should buy a call option if you're bullish or if you think the stock is going to go up. Okay. So you're basically going to speculate whether or not this contract is going to become valuable if the stock reaches $25. So let's say you're looking at this chart and you see that price is, I'm going to get out of this time frame. You see that price is currently trading at $24.75 or $24.44. So you're willing to bet that you can buy a contract with a strike price, which is basically you're buying a contract that says the stock price is going to go to this price here, which is called the strike. In this case, it's $25. You're basically buying this to bet that it's going to go to $25. If it hits, it's going to go up in value, but once it hits that $25 value, it'll go up significantly. And that's basically all it is. You're buying a little contract that says that you think this stock is going to go up to $25. Now, on the flip side, there's put options where you would buy if you think the stock is going to go down in value. So if we saw that it's currently trading at $24.75, and we think it might come down to this level here, 20 bucks, we would go in here, see if there's a put option that we can buy for the strike price of $20, and this would make money as the stock comes down.
Wow.
Make sense? Too fast?
Yeah, it will in a couple of months.
No, well, we want to make it super simple for you. So do you have any questions about like what an option is or how it makes money?
All of the above.
Okay, so basically, like I said, to keep it simple, an option basically is an option to purchase a stock, to purchase 100 shares of stock at a specific
price.
Yeah, but you don't actually have to end up buying that stock. You're just buying the option to buy that stock, and that option can lose or gain value just like the stock. Okay.
So you're making or losing money without having the stock?
Correct. You're owning a piece of paper that says you want the option, quote unquote, to purchase this stock at a specific price.
Okay. In a couple of months, we'll revisit. Can I ask another question? I don't want to monopolize.
No problem. I mean, we love the questions, and if anybody else has questions, please feel free to chime in or throw it in the group chat. We'll get to it for sure. So what else do you have, Ms. Anna?
I'm sorry, real quick before if you have a question, guys, just go ahead and put it in the chat too, and I can call them out. If not, go ahead and you guys feel free to chime in and ask what you got to ask. No problem.
Great idea.
Or there's a raise hand feature too, if on Zoom.
Oh, that's right. Yeah.
Go ahead, Anna. No problem. Ask question.
Okay.
Go ahead, Anna.
The stop limits, these buy stop limits, I'm on E-Trade and they have something, and I don't know what those are.
Okay, I don't have an E-Trade account, but the theory behind a buy stop limit order is basically you're setting a limit to how much you want to buy that stock at. Okay, so there's two parts to that. The buy stop is the price where the trigger, it's going to trigger your broker to tell them that that's where you want to buy the stock. So the limit is basically how much is the maximum you're willing to pay for it. Okay. So let's say we were going to do a buy stop limit on this one. We'll do buy. And then basically a buy stop limit is an order type. So we know we're buying it already because it's green, but we're going to change this to a stop limit order. Okay. So the stop, let's say we were trading Ori. So we're going to come over here to Ori and we want to say, hey, we want to get triggered into this trade only if it's going higher. So we want to get triggered into this trade at, let's say, an even $25. Okay. So this is going to be our trigger. We want the market to know that we want to buy Ori at 25 bucks.
Okay.
So that's what the stop part is in the buy stop limit order. Okay, so we'll come down here, we're going to set our stop price, and I want you to write down that the stop is the trigger and the limit is the max you're willing to pay for it.
Stop trigger.
Yeah, so let's say that you want to get filled at $26, or you're notifying the stock market that you want to buy at $25, but you're not willing to pay more than $26 for it. That's the limit part. You're limiting how much you're going to buy it at. Okay, you got your trigger here, and then you got your limit. So you could get filled at $25 anywhere in between, but you won't pay more than $26 because you're limiting what you're willing to buy for it.
And what are the terms used for selling?
The same thing. So any order that you have for buying, if you're going to sell it, it's just going to be the opposite. So it's just going to be red, but it's going to say the same exact thing. So it's the same logic behind the order type. It's just, the opposite end of the spectrum. So if we wanted to get triggered in, like let's say we wanted to short this stock and we wanted to sell it at $23, then that would be our trigger. And then let's say we wanted to sell it at, or we wanted to limit how much we were going to sell it for. We would put a limit of $23. On the sell side, things can get a little bit confusing, but what I want you to understand is the order types don't change. The only thing that changes is your bias or the strategy. So that's why for tonight, let's just keep it like we're bullish. So we think that it's going to go up. So we're going to trigger it at 25 and we're going to limit it to $26. We're going to pay no more than $26. And the reason I say use a buy stop limit order on the hot list is because we want to get triggered into that trade. For example, if you were to look at the hot list and you were, let's say this was today's, and we were to see ATI, it's trading at 1966. If you were to just buy it, you're opening up yourself to risk because it could go below. So that's why we use the buy stop limit orders to trigger us in if the trade's going in our favor.
Can you repeat that?
Absolutely. So the reason I say to use a buy stop limit order is so we get triggered into the trade and don't expose ourselves to risk. So if you were to look at this as an example, like ATI, this is just theoretically, if this was on the hot list today, you saw it, and for whatever reason you like the price, if you were to just go buy it as a market order,
you're buying it.
Yeah, you're buying it right then and there.
Yeah.
And not only that, but with market orders, you can open yourself up to something, and this is going to get real technical, but you're opening yourself up to something called slippage, which means you may think you're buying it at 24.44.
Yeah, I saw that. Yeah, I saw that today.
So if you're buying it at 24.44 and you put a market order, the market's going to fill you at whatever it wants to fill you at, or whatever the transactions are taking place at that point in time. So you're
Yeah.
opening yourself up and exposing yourself to what the market's going to give you. That's another key reason why we use a buy, stop, and limit order, because you're limiting what you're willing to pay for it, and you won't have to deal with that slippage. The con to that is, yes, sometimes your orders might not get filled, but you didn't lose any money. That's
Okay.
the con.
Okay.
The other one thing that I want to harp on, when you do market orders and you're exposing yourself to slippage, let's say you're
Yeah.
buying or selling 100 shares, right?
Yeah.
So that slippage is per share. So let's say that you thought you were buying it at 24.44, but you actually, since you put a market order, the market filled you at 24.54, 54, whatever, 10 cents more. You're
Yeah.
losing 10 cents automatically
Yeah.
per share.
I saw something else on E-Trade when I did a market order yesterday and today. And yesterday I was in a rush, so I just closed everything down. But today I went back and I checked. I bought something, and by the time I refreshed my browser, I had already lost.
There's two reasons for that. If you did it with the market order, which is what we
Yeah.
just went over, you
Yeah.
expose yourself to slippage, and there's something called the bid-ask spread. Okay. So look for example, the bid-ask spread on this
Yeah.
stock. You're
Okay.
buying it at 24.55, maybe if you put a market order. But if you were to turn around in that same millisecond and sell it, you're selling it at almost 35 cents cheaper automatically right off the bat.
Wow. Wait, what's that? What's the spread called again?
It's called the bid-ask spread.
Oh, okay.
So you'll start off losing before you know.
You're going to start off losing. Well, that's why you got to look for tight bid-ask spreads when it comes to stocks and options. Okay, 'cause you're going to be in the
Learned that the
red
hard way.
automatically.
Yeah, me too.
Okay, so the ask is the buy price and the bid is the sale price?
Yes, and if you have a TD Ameritrade, your broker should specify that when you hover over it. You see how it's
E-Trade has that, I just didn't know what it was.
Yep. So yeah, when you're buying it at the ask price, and the bid is what you're going to sell it at. So when there's really huge bid-ask spreads like this,
Yeah.
you're going to be in the red automatically, and it's going to
Yeah.
amplify times however many shares you bought.
When I first started trading, I did use E-Trade. I switched quickly, so I don't have much experience, but I recall that they have pretty big spreads, right? I think you'll find better spreads with another broker, but
Okay.
you may want to pay attention to that.
Yeah. Yeah. So
Same thing with Robinhood. So a lot of people
That's
don't
how they
realize
make their
that.
money, I guess.
Robinhood. What's that?
Is that how the brokers make their money, or
That's how
taxing
the
on that?
brokers, yeah, they make money off of the commissions and the bid-ask spread. Now, companies, this is a side note, but companies like Webull and Robinhood, they don't use the best, I forgot what they're called, but they don't use the best backbone brokerages. So they're going to go whoever fills the order. They don't care. So you could get a really, bad price with a real bad bid-ask spread, especially if you're doing market orders.
For a long time, not on options, but on regular stock trading, I was always setting market orders as opposed to setting limit orders. So I was always, and I was like, why is the price that I'm seeing not the price that I'm buying for? And then,
That's why, because market orders.
okay,
Not only that, but with you trade pre-market, and you can only do, I think, market orders in pre-market and aftermarket or after hours.
Hey, Ryan, it's called the Market Makers. That's what you're thinking of.
Market makers. Yeah, there you go.
Yeah.
Thanks, James. That's my boy, James G right there. He always got my back.
you guys have any questions about long-term investments or stocks to hold long-term, go find James G in the private group. That's the man right there.
Anything with Tesla, Vanguard, that's your guy.
Solar panel.
good to know. Good to know. Okay, so two things. There's no stop limits during pre and after market hours.
Paris, have you noticed that? I think there are stops.
Which is,
I think you could set a stop, but it's going to be like a market order. You can't do limit orders pre-market.
I believe that's right. I don't want to give the wrong information, so I'm not 100% sure on that. But let me do some research, and I can see if I can put that in the private chat. Let me double check.
Yeah, I'm almost certain that you can't do limit orders pre-market, so therefore you can't do like a stop limit. It has to be like a stop market. You can definitely have stops, but just not stop limit. That's it's one of the cons of pre-market trading. Not necessarily a bad thing, but it's one of those things like, we're going to give you this, but we're not going to give you everything.
Makes sense.
Okay.
All right. Well, I mean, it's we still got a couple more minutes. So if anybody has any more questions, by all means, I guess we probably have time for one more, but yeah, if you might have one more question, anybody?
I'll go all night. No,
I do.
I won't take up much more time.
And again, yeah, if
I have another question.
okay.
Sure, what's up?
So with the, so to buy, right, you do this limit, the stop and the limit, right? To sell,
yeah.
do you do the same? Do you have the same option?
No,
Like-
for the same that you would just do a stop. It's actually specifically called a sell stop.
Sell stop. And I specify the price to
Yeah.
sell?
Correct.
It's not to limit the losses, right? I mean, I can select a price higher than what I paid for, right?
That
Would you want it
technically,
lower
yes. Yeah, but you would want it lower in this case.
to make money?
Mm-hmm.
Yeah,
No, to sell, I want to sell more than I paid for it.
Right. So let's say you were
But
doing.
that's to take profit, I think. she's
Yeah.
talking about.
So yeah, and you can do something called an OCO bracket where you're actually putting all those orders in at one time. So you're putting your buy stop limit order, you're putting your sell stop limit order, which is above your entry, of course, and then you're
Yeah.
putting a stop, which is below your entry. So let me just kind of visually do it here. So
No,
you're-
say those words again.
Yes, ma'am. So the stop is going to be below your entry, of course, because you want to get stopped out if the trade goes in the wrong direction. And then you're going to have your buy stop limit order to buy or get triggered into the trade. And of course, you can have another sell stop or sell stop limit order
Oh my God.
higher. So that's getting more and more advanced with the orders, but that's what you're asking. That's what it is.
Okay, so there's a stop and there's a buy stop and a sell stop.
Correct. And just think of it as three
Yeah.
different, yeah, there's a buy stop, a sell stop, and then just a regular stop.
So what's the regular stop?
A regular stop is basically, remember, a stop is a trigger, okay? So there is no limit on this. So whatever price you set here, that's what you're gonna buy or sell it at, okay? So, but with this buy stop limit, you're adding one leg on there. So if you want to be triggered into the trade at 25, you can limit it and tell the stock market, hey, you don't want to pay no more. I want to limit my purchase price at $26. If it goes above that, don't fill me.
Okay.
You know what I'm saying? So that's basically, that's basically what that would be.
That's the stop? No. That's the limit stop
That's a stop limit.
or stop limit.
Yeah. So a stop is what you want to do when you're basically, let's see, is when you're wanting to get stopped out of the trade because you're like, oh crap, you know, the trade's going against me. Stop me. Stop my losses.
And I definitely, or we would definitely, I would say, get this video edited and we'll post it to the website as usual. I believe it's the login will only subscribers have access to login, but of course, if you hit a little hack is to do the 5-day free trial, and then you can have access to the videos and stuff, and you can again cancel anytime if it's not for you, and if it is for you, by all means, stay. We appreciate everybody for coming out. Thank you. These seminars, as you know, are growing bigger and bigger and bigger. We're trying to kind of reduce them to doing once a month because we're just trying to do a lot behind the scenes in terms of the app and revamping the website and just providing as much helpful, as many helpful things to you guys without being redundant is kind of the goal here. So once a month we'll probably do this. We'll definitely do it again soon. You'll see a lot of advertising behind it. If you guys have any questions, by all means, any more questions, I should say, the private group chat is open and we try to get to them as soon as possible. You can message us personally. And of course, the Facebook group or social media is a good place as well too. Once again, thank you guys so much. Thank you, Ryan, for your time. Thank you, James, for your time.
Thank you all.
No problem. And Miss Anna, I just want to harp on one thing. But aside from the orders that there are available, I just want you to think about it as zones. Your entry, your stop loss, and your profit, where you're going to take profit. Don't worry about this yet. It's going to take time to get used to these different order types. You have to
I
read up
lost
on them.
money a second after I bought something. It's important.
Yeah, that will,
blew my
yeah, but I
head.
don't want you to, I want you to be able to wrap your head around it, but just think of it
Yeah.
like that. Like when you're setting
Yeah.
up a professional entry, exit, and stop loss, that's what it's going to look like visually. But we'll go
Okay.
over the orders, ask questions in the group chat. We'll get to it. So thank you
Okay.
for your time. Thank you for coming out.
Thank you guys. Great weekend. Or night. I'm already on Friday.
It's Friday yet? Oh,
Wait, what's today? Monday?
For me, it's Friday, I guess.
Man, you're in Costa Rica. Your time is just different.
Yeah, no, sorry guys.
Who's
Every
in
day is a
Costa
holiday
Rica?
for me. I'm in Costa Rica.
Oh, nice.
Yeah. I moved out here. I've been here for like 4 or 5 years now. I love it. It's paradise for me.
Ugh, it's gorgeous there. Yeah. My friends have been there. I have friends from there.
See, that's why I started
Hold up.
trading. Oh,
My
Morning.
goddaughter's.
Got the side. I love it. Yes.
¿Cómo se dice ya tú sabes?
Two sides, like you already know. That's what it means.
All right, thank you, Ms. Chavez for.
Thank you,
Yes, thank
guys.
everyone.
Thank you.
all right, y'all take care.
All right. Y'all have a great one.
Great one, yeah.
I feel like that went great, right?